Hello and welcome dear traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is January 17 and we're starting from EURUSD pair with Dean Leo. The long-standing sideways channel 1.09, 1.10 and the EURUSD pair was broken on a downward trajectory. During the breakdown, there was an increase in short positions, which ultimately led to the prolongation of the corrective cycle in the market from the local high of last December. On the 4-hour chart, the RSI is crossing the oversold zone, indicating a local overheating of the euro's short positions. However, it should be noted that critically important oversold areas were not affected. On the same time frame, the alligator's MAs are directed downwards, confirming the price exit from the stagnation phase. A stable holding of the price below 1.0850 could lead to a subsequent increase in short positions, contrary to the technical factor of the euro's cores being oversold. In this case, a movement towards 1.0800 is possible. As for the alternative scenario for its consolidation, the quad first needs to return above 1.0900. The comprehensive indicator analysis for short-term and intraday periods indicates a downward trend due to the breakdown of the lower boundary of the flat range. The next stage of our review is the next major. It's time for GBPUSD with Jakub Novak. Disappointing UK labour market data put pressure on pound. Meanwhile, statements made by Bank of England Governor Andrew Bailey had no impact on the market direction. Pound may continue to decline today if core inflation in the UK demonstrates a stronger than expected fall. But if consumer prices show growth, a rebound will occur. Long positions buy pound when the quote hits 1.2643 and take profit at the price of 1.2680. Growth will occur only after news of rising inflationary pressure. When buying, ensure that the MACD line lies above zero or just starts to rise from it. Pound can also be bought after a 2 consecutive price test of 1.2611. But the MACD line should be in an oversold area, as only by that will the market reverse to 1.2643 and 1.2680. For short positions, sell pound when the quote reaches 1.2611 and take profit at 1.2577. Pressure will increase if inflation in the UK eases. When selling, ensure that the MACD line lies below zero or drops down from it. Pound can also be sold after 2 consecutive price tests of 1.2643. But the MACD line should be in the overbought area, as only by that will the market reverse to 1.2611 and 1.2577. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Dimitris Tsabas. Early in the European session, gold was trading around 2029, below the 200 EMA and below the 21 SMA, located at 2044. In the 4-hour chart, we can see that gold is trading within a downward channel forming since December 22. In the next few hours, the price is likely to continue declining only if it consolidates below the daily pivot point at 2035. Gold is under downward pressure. Since January 10, gold has tried to break the 6-8 Muri level. 2062, the level that coincided with the top of the downtrend channel, and could not break it. Since then, we observed a strong downward correction. Gold could likely fall and consolidate around the low of January 10 at 2013. If bearish strength prevails, it could reach 4-8 Muri around the psychological level of 2000 USD. Gold has strong support around 2022. Yesterday, during the American session, it reached this area and since then had a technical rebound. If gold falls towards the level in the next few hours and proves that the weekly support is strong, it could offer a technical rebound and reach the pivot point area at 2035. In case gold recovers and consolidates above the 200 EMA, located at 2032 and above 2035, it could be seen as an opportunity to buy with targets at 2044 and at the top of the downtrend channel around 2050. On the other hand, in case the technical rebound is not strong enough and gold finds resistance around 2035, it will be seen as opportunity to sell with targets at 2023 and 2013 and at the psychological level of 2000 USD. And again, we're talking about gold. Andrei Shevchenko has a trading plan for this commodity asset. After a strong bullish momentum in gold at the end of the week, prices pulled back and currently test the break area from January 11. Market players can take advantage of this situation to open long positions, with stop loss set at 2012. Take profit upon the breakout of 2063 and 2087. The trading plan followed the framework of the price action and stop hunting strategies. What about cross-currency pairs? For example, AUDJPY, Arif Makmur describes. With the appearance of descending broadening wedge pattern and the appearance of deviations between the price movements and the stochastic oscillator indicator on the 4-hour chart, this gives an indication that in the near future AUDJPY does not continue its weakening until it breaks below level 95.78. It will have the potential to continue strengthening to the level 97.74 in the near future. And finally, here's Laurie Bailey with AUDUSD currency pair forecast. Let's have a look. The pair lost 75 pips yesterday and broke the support levels of the target level of 0.6612 and the MACD line. The next target will be 0.6547. However, risk appetite may surge after the release of inflation data from the Eurozone and retail sales and industrial production reports from the US. The dip below the support may turn out to be false, and growth may continue above 0.6693. If upcoming data also turns out weaker than expected, AUDUSD will head towards 0.6547, 0.6514. On the 4-hour chart, no clear signs could be seen of either a continuation of the decline or a reversal. Usually, the pair would continue to fall, but market sentiment appears to be changing. Commodities and stock indices may also grow. That's all for today. See you online soon and good luck.